Monday, November 25th. Market analysis, Stan Ehrlich. Good morning. I will not be making my YouTube recordings Tuesday, Wednesday, Thursday, Friday this week because family going to my daughter's. Now, I will start up again next week on Monday. We do have some very significant developments today, and naturally, just before I leave town. So we have a gap up, very important. Stock market indexes across the board, all of them that I monitor. Some of them are now also overbought. Two reasons to believe today is profound, potentially a major high day. Three, some cases where you look like we're developing a double top. So, overbought conditions in some cases, double top in some cases, and an exhaustion gap to the upside in almost all cases. Here we have the upside gap on the E-mini. We have it coming extremely close to the previous high, double top, not quite overbought. Next, this is simply the 1 minute chart detail, and it looks like it could easily make new lows. If we do make enough new lows and drop off to unchanged or even lower than the previous Friday's close last Friday, significant reversal in many cases may end up developing if we stay that way on the close, but you have to keep going down. Next, we're not overbought, but double top potential as you would expect in the SPY. Upside gap, exhaustion, double top, and almost overbought. Looks like it may turn around on the downside. Now, I know we had very similar circumstances back on November 6th. So I'm only warning you. I'm not saying it is topping out, but this is what it looks like before it is obvious past tense and you're too late for the trade. Next, spider 1 minute chart near the low needs to come down, close the gap at a minimum, and if that does not hold and it keeps going down, getting below yesterday's low on any and all of these index charts would generate a bearish engulfing and in some cases an ER official red sell signal. Next, we've got not a new high, and not overbought, but we still had this morning the gap, but it's now already been closed on the QQQ in the last, half an hour or so. So the gap is now closed there. But again, if we get below and stay below yesterday's low, we'll have a bearish engulfing sell signal. But it's not an official ER red like the top of the market on November 11th. That's the signal. That's why I developed ER signals. Next, we've got the obvious up gap on the opening here, a new high, and then it came down and closed the gap, like I said a moment ago. And so far, it's holding exactly at the right spot, but I don't think it's going to last. Next, we got the NASDAQ, not oversold, not a new high, not a double top, but you know something? That looks like a small head and shoulder top may be developing. First shoulder, October 30th. Next chart is the 1 minute NASDAQ, new highs, and a very quick, complete reversal, so to speak. Next chart. YM overbought, gapped up, and in new high ground completely. So if this fails, it's pretty significant. But it's near the high of the day. You're going to see the same thing in the Russell in a moment. So it really has been the strongest, the quickest, the best. And if it fails, wow, I think we've got something really important happening. But not quite yet. I see this stuff before it happens. I'm wrong sometimes. That's why I stress the fact that I haven't got my signal. I've got a setup. Next, YM, 1 minute. Next, Russell, overbought at the high and at the top of a major historical resistance area to boot. So upside exhaustion gap, overbought conditions, new high for the trend, and a resistance area to be added to the list. Wow. If you were looking to take a very, very small risk with the possibility that this could be the top, you're looking at almost to the tick, I would consider the short side of the market. Next, Russell 1 minute, right up there near the highs just a few minutes ago. All right, bonds, yippee-ki-yay. Here we go. New high and last, up 49, a new high for, I think it's 8 trading days, almost 2 weeks. I hope it's going to stay here or go up even more. I've been saying for a couple of weeks, if not more than that, if I get a close above 119, and here we are almost 18, all of a sudden, from the low 16s, I'm going to be tickle pink. You've got your double bottom. You've got a 2-year head and shoulder bottom formation that is a double shoulder pattern. First of all, this is rare for the 2-year size. Secondly, it's very rare because of the double shoulders. Thirdly, it's acting just right. So far, so good. So this is the ballpark now beginning to be a little bit lower than where we are. We used to be right in the ballpark for long term. I'm saying 6 months to a year, the beginning of a bull market that should move our price levels in bonds up to 150 or higher. But this is one of my very, very few long-term trades that I'm willing to speak up about, long-term predictions that I'm willing to speak up about because I usually don't do some stuff that's this long-term. But so far, so good, especially this morning. And guess what? 10-year notes are almost identical. In fact, they're even a little bit better because this is a new high for 10 days. And all I need is a close basically above 110.30.23. 110.23 would be just fine with me, and we're even closer to that. And we're about to get knocked out finally from our short sale that happened on the signal generated on September 17th. And an ER3 short overnight on the next day, September 18th. Wow, this has been and I think we're going to get out, so I'll use a past tense. This has been a whopper of a trade. Excuse me, down from 115 and a half to 110 and a half. And we'll probably get bumped out at 110.18. Right about there is where our stop is. Okay. Crude. Failure to make a new high, dropping off. We're kind of between a rock and a hard spot here. Good support below the market. Has passed the test 4 different times in the last few months. So I'm looking for a move down to 66.45. No follow through the upside. It did stop at a resistance area, and the longer term trend is basically down with some bullish implications, but I don't think it's going to work. I think we're going to go down some more here. Watch out for gold and silver. I got some brand new signals on those. You'll see in a moment. Heating oil. Resistance stopped the rally, starting to slip. I think it's going to challenge these various lows and make new lows for the trend. Natural gas. Whopper of a sell signal on Friday. Now, we may just have in the last few minutes made a higher high, in which case the signal didn't work. Still, it was a signal. The high of 3563. Yep, 3566 is this morning's high now. So we're stopped out. ER3 got short on a gap up opening, so the risks are a lot smaller, and we took a small loss. That goes for ER3 scalp and overnight. We're flat completely. ER1 scalp and overnight. One scalp did make some money yesterday, Friday, that is, and overnight had a losing trade. Now, these signals are not always the top of the market, which I love, and that was October 4th, or the bottom of the market, like I love, on November 4th, but sometimes it's part of a topping out or bottoming out process. So we'll see here. Eliminating the signal, this is breaking a major long-term bear trend line, And today, for the first time, is 100% of the range above the trend line, and it made a minor new high, and we're right there right now. So that adds up to being bullish. So maybe we will follow through to the upside some, and we'll see what happens after that. So my expectation is a little bit more strength, very short term. Next, gold. Bearish engulfing. The only thing I don't have is overbought. Otherwise, this would be a whopper of a bearish ER signal, but it's not because we didn't get overbought. Now, this does mean to me that we're starting to work our way down and awful quickly today with the size of this bearish engulfing. So I'm looking for a low of 25.40 to be tested and broken. Prior to today, because of the way it got up, stayed up, and ran up without being overbought, I probably was looking for more strength. But this changes the picture 180 degrees. Silver, same thing. Big outside down day, bearish engulfing, wasn't overbought, so I can't say that I got a sell signal. But a lot of this looks like we're going to test the lows, which is now not very far away all of a sudden, and probably break the trend line and break the support and drop off. I'm thinking 28. Big move down in platinum also. All three precious metals. We still have a sell signal at the top of the market on October 30th and on May 20th. Whoppers of sell signals. Now, these signals are not necessarily meant to be always a long-term trade. They obviously, I've been mentioning for 2 years now, that the ER1 contains a scalp trade and an overnight. The ER3 does the exact same thing, contains a scalp trade and an overnight. So the overnight versions can lead to multiple months worth of position. Not always. This one lasted a few days. It did very, very well for a few days. Next is high-grade copper. Looks like it's going to make new lows. I don't know if this support area is going to hold here. I think it's going to test the 4.00 area and a little under. We're still short from a signal at the top of the market and a signal a few days later. Still short from way up here, 4.6. And now we're at 4.1. Looking good on long-term ER3 position trade. There's our stop. I'll find out what happened next week. Okay, cocoa. One of my subscribers asked me to include cocoa, so I'm doing it. Gigantic pennant formation, which looks a lot like a flat bottom right triangle. Now, if that's the truth, then we're going to break the flat bottom, which is not flat, but it's close. And that's the history of this pattern. We stopped at the top of the rally yesterday, Friday. Excuse me, at the top of the pattern and dropping off substantially today. Now, I'm looking for a test of the bottom of the pattern, but if it doesn't hold and we start breaking below this support line under the lows, that would be very bearish down all the way back down to something like below 4,000. Next chart. Soybeans, all the grains are not acting good except maybe meal. But that's not going to survive if the rest of them keep on hitting lower levels. On Friday, we made a new low for beans for a few months, since it looks like August. Since, well, even earlier than that. Yeah, August, good. A bounce by the close on Friday and a little more today doesn't add up to anything. I'm going to tell you that we're going to make new lows for the whole damn trend in soybeans. Wow. It looks to me like it's going to go under 960 without much of a problem. And we're still short from that sell signal on November 14th that at the time I didn't like. And I said why I didn't like it. But it's turning out to be a great signal. So My opinion is my opinion, but signals that are generated from the strategy don't give a damn about what I think. They make the trade because of the code, which of course I developed, but this is eliminating, my opinion is putting back into the equation human being stuff, greed, fear, um, and et cetera, et cetera. So we're still short from the strategy. It's working. And I'm thinking it's going to make new lows now. Oil. It's gotten oversold Friday and again today a little bit more. So because of that feature, we could rally at any point, but I don't think the rally is going to go very far. I'm expecting a move up to 42.62, give or take a little, to be all about all there is to it, considering we've been down below 41 at this point. Now, we did bounce off a little support, and if this does develop into a low, well, I wouldn't be surprised because they oversold. But that's about all I've got to go off of, except you've got two major lows. One of them is a little double bottom in a week or two period, and another one is a month and a half later. And this one's at the same price level. So supposedly we're supposed to have two lows over here. You know what I'm getting at. This could be a large head and shoulder bottom with a slightly upward slanted neckline at the very early stages of the last shoulder developing. I would have to say this inside shoulder matches this one. Timing wise, it looks about right. The outside shoulder, the first one on the left here in late April and very early May, looks about right for this time period and the price level. So maybe shoulder low, and I'm talking very prematurely. Don't jump on the bandwagon unless you see a signal or have some reasons to do it on your own, and make sure that your risk factor is a handleable risk. Soybean meal is about the only one that has some strength here, and at the moment we've rallied back up nicely, but we're not holding the rally very well at the moment. We did get oversold. We did bounce off the support, and we have broken this resistance level at the top of the support. And I need a lot more strength in order to talk bullish on this. All I got is a little rally in the resistance, and I think it's going to turn down to new lows. We have corn, not impressive. Resistance stopped the rally a couple of weeks ago. This rally last week couldn't make any new highs. We're now basically below all of last week, or we were a moment ago. And I think it's going to drop off and make new lows completely. We never broke out of a possible head and shoulder bottom. Almost, but that doesn't count, November 8th. And now that pattern is becoming skeptical or jeopardized because it's going too long, too much sideways for too long. You're not supposed to do that. Once the pattern's complete and you've got everything you want, the breakout should just plain old every day develop fairly quickly and off and running. This failed. Watch out, this whole thing could fall apart. Wheat is about to fall apart and drop into new low ground completely. Now, yeah, you might say double bottom, but it looked a lot better last week. And we're almost at, this is the second lowest close for the move down for months, if we stay here. It's not oversold either. I think we're going to see new lows. Cattle, rallying back up again to resistance. We got the bottom of the market, or very, very close, on an ER official buy signal. That's why it's green. And we are still holding the position. I could start moving the stop up, but I'll probably do that after I get back. Not real money at the moment, so not concerned about that. I'm concerned about how the strategy is working and what you guys are seeing. So I probably will start moving the stop up. And I'm looking for probably a minimum of 191.15, give or take a squeak, where we had a bearish engulfing at the top of resistance and started that move down. It wasn't overbought, so, well, didn't have a red one. All right, now we've got Miss Piggy. Support held. Top of a upward slanting resistance line, stopped it earlier, November 1st, went down to support, held, didn't get oversold though. Bouncing a little bit. Not quite sure about this, but it looks like we're going to test that line again at 88.5. Next chart is that one single stock that I have now, SQ, because the long-term picture here looks outstanding. Now, there's a fair chance that the 90 level may not be able to hold if I do get much more bearish on the stock indexes. And if that's true, then I think a correction down, I don't know, maybe even to 75, 78, 74, something like that, might develop as a gap to close. But on a long-term basis, this chart looks very bullish because of new highs for days for the last 2 years. Resistance levels have been broken and maintained. Now dropping back to support or a little bit into support should be a longer term buying opportunity. We'll see what develops. And now back to the E-mini. We're low and last, dipping off. Almost a new low for the morning. The NASDAQ, 1 minute, a little bit firmer, but starting to slip off. The YM, a little closer to making significant new lows for a couple of hours. And the Russell 1 minute, super strong, along with the YM at the moment. I'm really excited about my bonds and notes and the new signals that I'm getting in the precious metals. You guys have a great Thanksgiving. Happy holidays to you and profitable trading. Signing off. See you next Monday.